if you've been following me for very long, you know that I like my charts covered with crap. I like them crusty, so you can't even see the bars. One of the reasons I have all of these indicators is because it really helps me visualize price action as it's happening, and it's training wheels. They're crutches. The trading system is basically pivots and breakouts from significant trends and levels, and it's mostly backside moves, so short. Um, and these are all of my studies are actually things that I used to chart out manually. I would spend hours making charts for various time scales, and then I started automating them, and this is the result of that. It's it boils down to about two or three main core studies that I use, and then there's a bunch of bells and whistles like bell lines. You can kind of see here that I didn't like the TOS built-in off hours shading, so I wrote a study that fakes it for you. And things like that, where it's just stuff that's fun but it's not really totally necessary. But most of the studies that I use on a daily basis for most of my charts are based on things that I do anyway. Like while charting, I'll draw trend lines, for example. And the way I tend to do it is drawing it from peak to peak, and then once a peak is formed, if the price action doesn't cross it, I'll get in short and just wait for it to cross. And you can often capture pretty decent moves. And even if it does cross, it can continue for a while before price consolidates and then begins to move on again, and then you just draw another trend line to the next peak. And this is helpful because when it breaks through these lines, it lets you know where the trend is going. Like once it decisively breaks through, you can tell that at least for that part of it, it's going up. And I do have a separate video on the Auto Trendlines that I just put out that goes into better detail about that. But rather than go through each one of these here, I can just add them and show you how they work, how I use them, and what it looks like to build them. So I'll go into my studies here and then just remove everything. I've got a lot of studies. It's a lot of trash on there. So here's just a blank chart with nothing on it. Let's go do a 180-day 4-hour chart so we can kind of see. So normally I would be drawing trend lines on here, but I've got my new trend line study, and if you want to check that out, check the other video. It's up. It's got links to everything, and this will show you what it is that I just did this study. And so I just drew out all these lines, and you can see they're the same lines that I would have drawn. It's just now it's doing them for me. And you can check out that Auto Trendline video to get more information. A lot of what I use are moving average studies too, for indicators. Like my indicators tend to be highs and lows, moving averages, and the dollar lines. Dollar lines are like a psych level, and they're really for smaller charts than 4 hours is a bit big, but often price action will interact with prominent psych levels. So you can see this is the 150 line, and this one is set to every dollar with a dash line on the half dollar, and that's just because often price action respects these. I don't tend to use them on the larger charts though, because that is too messy for me even. But the moving averages are actually kind of cool. This is the moving average study is it's a pretty neat one. You can just put in a moving average line, I guess, but what I wanted to do was make something that I could have a bunch of different options, and mostly because I wanted to have different lines on different period charts, so I'd have more control over it. So this will show when the time is below, let's say, a daily chart, so it won't show on anything more than a daily chart. Or you can have a different, you can put the study in twice and have one that only shows on a daily chart. Using an absolute time scale is the main reason. This anchors it. So the absolute time scale is day, because what I want to see is the daily 200 SMA. I don't want to see the 4 hour 200. I want to see the daily 200 SMA because that's an important study for for my purposes. And so you can see it just draws it in there. And one of the neat things about the moving average study is that it switches from green to red automatically when price action moves through it, so you can at a glance see how the it reinforces that price action for you. So I like to have a 50 and a 200 simple SMA on the daily, and this lets me kind of see bigger trends. It doesn't always matter unless price action is actually near them, but it's helpful to see. And what you can do is change the color, the style, the width, just to have different SMAs and tell them apart. I like the 50 and the 200 because that's really wobbly because it's daily. It's not as smooth, but it does definitely show you how price is interacting with it on a 4 hour chart, and it'll work that way for any of the size charts. If you go into a let's say a 30-minute chart, you can see the same daily SMA on it, and that's the main reason I wrote this, was to be able to take advantage of that. So on this, we've got the I'll put the highs and lows on a lower chart because this the highs and lows study doesn't really it only works on lower charts, and so only show below. Usually this is set to the chart that you have the opening range set to. So if the opening range length is 30 minutes, you only want to show this below a 30-minute chart. So it doesn't show anything here, but once I go into a one that's lower, like let's say a 5-minute chart, then all of a sudden you can see the lines here popping in. So if you the study itself, I use opening range a lot. That's in the first 30 minutes high and low, and then I'll automatically calculate the this is the little round dots. So the high is a little bit darker and the low is the same, and then the mid candle of those two is a little bit brighter round dots. Let me make this like 100 and then we can see them better. So what that means is often like the opening range will dictate a lot of price movement. Like it'll reject off of an opening range, either to the top or the bottom, or it'll try and reclaim opening range. And when it retests it, then you can be in long. I actually took this trade and it worked. And I went up to this would be pre-market here. So this is the pre-market high, is this dashed line. And you can make these whatever colors and dashes or whatever you want. To help you remember. You don't have to use them all either. That's the other thing about the highs and lows, is that you can pick the ones that you want to use. So I tend to use all of these, which is why I wrote the thing. And it's so more chart garbage for me. So that's all of the indicator studies. The trend line is part of the price action studies that I use. That's the basis of how I trade. So I'll use all of these indicators to show me sort of where to trade. But the price action studies get into more detail of where the price is currently going. So the auto trend lines I just showed you. The next one is it used to be called a lot of things, MC script a lot, but it's a Fibonacci study, so I called it Fibonacci. What this does, out of the box default, it's set up for a 1-minute chart to show you, and then you can see it adds a whole bunch of extra stuff here. What it does, it's Fibonacci retracement, so you can do this yourself pretty easily. If you wanted to see like what the next move would be from the initial run, for example, you'd run a high to a low, and then it would draw you a mid candle. So if you look here, I'm going to remove this. It's got that automatically drawn here. So it's set up in the study that you can tell it what the peak threshold is. Like it has to move beyond a certain length in a certain amount of time to draw new high and low. And then you can also, there's a bunch of other settings that let you tell look back time. So in the last half hour or whatever. So the 1-minute chart is set to the last half hour. And you can see it draws this at the mid candle. And there's also a lot of confluence here too. You can see the opening range, because that's what it drew the Fibonacci off of. that 50% is that same 50% mid candle. So a lot of times what price action will do on these is when you have a longer, more stable one, like in here, it'll drop through and form a new one. This is where it formed because it's got its new peak, it's got its new trough that it's forming it from, and you can see this is where it drew it from. So this is the last half an hour. So you could draw one yourself, and I used to do this all the time. I would draw it myself, and then there it is. The cool thing about Fibonacci numbers is that they're based on the golden ratio, and I have another whole video about this too. But it's not something that's there because there's a bunch of market makers using it. It's there because this is a emergent property of price action in the algorithm of buying and selling. You have buyers trying to buy low and sell high, and sellers trying to buy high and sell low. And one of the things that pops out of that is these Fibonacci numbers. I mean, they're based on the golden ratio. It's 1 to 1.6, I think, and that shows up a lot. This is fundamental math of the universe, so it's not surprising that it'll show up in a chaotic system like this. It's an oscillating chaotic system, sure, why not? But the cool thing is you don't have to know all the math behind it. You just have to understand that it'll often, when you create a peak and a trough, that mid candle becomes a support or resistance line. And you can see here that as price action comes back up, it fails to take that line and keep it, and it drops again. And because it doesn't drop below the initial trough value, it will try again. And if it keeps trying and never really dips below this, it'll probably eventually break through. So this is a way to either make a trade off of a rejection or a trade based on the belief that it will break through. And once it does break through, you can see this again with the confluence. These dots represent the low of the opening range, and the price action, because of the way these mathematical structures work, has confluence with the 50% candle of that last price move. It's not an accident, and it's not man-made. It's just how the numbers work. And anytime you see confluence like that, this is how I trade. I don't get into a trade unless there's more than two things. So I need three things to be able to get into a trade, and that'll either be there's a trend line break, there's a high and low value, there's a Fibonacci line. There's a lot of different indicators that I use for when to get in, and then I just add them up and decide at that point if there's enough confluence, then then I'll enter a trade. The other one that I use exclusively is the Jimmy Momo zone. So there's a bunch of different kinds of ways of doing this, but you can just take the defaults because they're usually going to be pretty good for whatever you're doing. The way these work, and so I would draw these out too, like I showed you with the Fibonacci retracements, where you draw it between the most recent peak and the most recent trough, and then it'll show you what the important lines are. Oh, and the other thing about this that's kind of cool is I also have the 161 lines on it, and I'm drawing it from the peak to the trough, and it'll draw a line. This is the little purple line up here. This is often a line, not usually on Apple, it doesn't usually get up here, but you can see later on, this just from this little area, there's confluence here too with the pre-market high. I mean, all of these just sort of add up to, this is an important level. So it does end up rejecting off of that. This is also 150 psych level, which is a pretty important one for Apple. But you can see all of these little lines are drawn out, and you can also do them in the reverse. So if you draw from the trough to peak, it will draw that 161 line down at the bottom underneath. And you can see here, this is the line that it had drawn, and this is the 161 line. The purple dots here are the negative 161 of the opening range, which is not as powerful. I mean, this negative 161 line on a 1 minute chart often price will reverse there. I mean, it's pretty amazing. This works on the S&P 500 as well. I mean, it's pretty well respected, at least on the short side. Not as much on the upper side, but there's a bias towards growth and not decline. So that may change if we stay in a bear market forever. But the the Jimmy zones are based on James LaFaith on Twitter. Go check him out. He can explain this way better than me. But the idea is that you look for significant candles, and you draw the risk line from that. So if like this is a move down. So as price action moves down, people are risking off of this. If price action ever moves above this again, people may get out of this trade. And so you use that information to draw a rectangle from the base of the move to the wick, and then when you draw that rectangle, it gives you a great visual indicator. You can see price action coming near this, but not quite getting there because that's a risk level. Price action moved into it and wicked off hard, so you can tell based on this zone that if you get an entry somewhere in here, it's a pretty good bet that it's just going to keep going down, and that's a decent entry. And this works with any significant candle height. And you can see that it keeps the historical ones and it flips from red to green when price action moves through it. A lot of my studies work that way. And they often have confluence with later price. So the first bar of the day here, this is the rectangle you draw because it's a green bar. Price action started here and went up, so you draw from where price action starts on the bar to the wick, and that's what this one is. So you can see all the way across this zone here lines up with in the highs and lows indicator. You can see that this is the opening price, which makes sense because it's the bottom of the wick. But then it also is the top of this happens to be the 50% line of the opening range study. So, I mean, it's halfway between the top and the bottom. And oscillating chaotic systems often do this where they're trying to find a midline and they will range above and below. That's why you often see these loops, where there's a push up and then there's a push down as the price is trying to find its level. And it's a lot of different factors. I mean, in small caps, this is a lot less predictable. This is why I like large cap options, because they're predictable. They move slowly, and it's easy to see where the price action is because they're harder to manipulate. There are just too many people buying and selling this in any given day to be able to move the market much. And even if they do, a lot of times you'll be able to spot it with something like this, where it's like, that was a big move. I mean, you can tell from the price action when there's like an FOMC, for example, there's a huge spike in volatility. It's the same way on a smaller scale if there are other, I mean, you can often tell when large investors are buying or selling into an area, and it's often these zones. So I was drawing these out every day again, and this is just something I didn't want to keep doing, so I automated it. That's not something I want to end up doing all the time, is drawing zones. So I created this to be able to show me where that is. One of the other ones that I tend to use is my anchored EMA clouds, and that's this is based on Ripster's EMA clouds. And what I've been doing with them is I changed it to be anchored, which means it's based on a number of hours and not number of bars. And so if you want to, I've got a whole other video on this of how to calculate if you want a 10-minute EMA on all your charts, you can do that here. And this, in fact, the default of this is a 10-minute EMA, because 1.5 hours is 60 bars of a 10-minute, and so that plus I think 2.3 is the upper end of that. So this is a 9 to 12 or 9 to 20 EMA. I tend to like that. And I like to draw the slow edge, because then that'll show me overall trends again. And you can see this kind of draws a ribbon, and again, price action changes the color of it as it moves up and down in between it. And often you can use this slow edge as a gauge of whether or not to be in. So it breaks through here, but because it doesn't break through here, you could be in this trade until it breaks, and it goes pretty far down. I guess I would probably get out somewhere down here anyway, because once it crosses, like this was a pretty stable previous 161, negative 161 line. So I would probably think about getting out down here, because it's also this is the red to green move. This is yesterday's close, and this is the percent. So at this point it goes negative, and then there's a large tendency to try and keep that above there. So it does reject, and it comes back. So this would be a nice exit. But if you wanted to use the EMA cloud, as soon as it pokes through again, then you could get out. The problem with this is that is not a very big move. And it's, for me, it's more a way of determining an entry and when consolidation, because this is kind of a bad example because this is a consolidation chart. I mean, this is basically from a larger level. This is just moving sideways. But you know, that's how it works sometimes. If we pick a different chart range, we might be able to see something slightly different. But then you need a bigger EMA. I have another one called Fractal EMAs that tries to draw these automatically, which doesn't really work. But when you're in here and you want to make bigger clouds on a 30-minute chart, it's going to be a lot bigger. But often what I'll do is, if this is 0, it'll just automatically calculate the base range off of that. And this'll give you a much bigger trend. So that's 120 hours. So somewhere in between, something like, you know, maybe 60 hours. You'd have to do the math to figure out which EMA you want on which levels, but you can kind of see here that once price level goes through here, it just keeps going up, and at this point it's still up. So you could just be in this trade in calls this whole time, and it would just, you know, go through. And you can see also these Fibonacci levels are not that great when you use them on the 1 minute. These are not anchored, and so, or they are anchored, but this is anchored for a 1 minute. So you'd probably want this to be something more like, if this is what is this, a 30-minute, or yeah, this is a 30-minute chart. So let's make this like something like 20 hours, and then that's generally the only thing you'll need to change on that. Which actually 20 hours may be, yeah. So here you can see the lines. They get a lot more stable the longer you make them from. So this is the mid candle between this peak and this trough, and you can see it's been stable. Once price action interacts with it and moves through it, it stays above it the whole time. So you'll need to tweak each one of these for different chart sizes. That's just the way it works with this one. So that's really it. Is, you know, the basis of all of the trading decisions that I make are some variation of these few studies, and the most important one is the trend lines, highs and lows, and the Jimmy zones. These are what I use every day to make these trading decisions. And this is all just, you know, everybody's got their own personal way of doing it. This is the one that I've sort of evolved that works with the way that I trade. So it's not going to work for everybody. I mean, what I'm seeing here is this is just a visual guide for me to make judgments based on the price action that I'm seeing, and that just takes screen time. It took me forever to realize that, but that's really all it is just giving you more input data to be able to make better decisions. And you know, that's going to be a personal, it's like you have to learn how to ride the bike. You can't have somebody explain it to you because it just doesn't work. So hopefully these studies are in line with something that you're doing that will be helpful for how you trade. And as always, I'd love to hear it if you like the studies, if you use them, and if they've been helpful, or if you have suggestions. Thanks a lot.